Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Euro dollar. An interesting dragonfly doji pattern yesterday after the previous session's small bearish black crow. The open and close were based, I suppose I could add yet again, on the June 2018 high at 118.51, though that would not be entirely accurate. But it has been an interesting level since last week, that 118.51 level. Prices punched down through the June 25 high. That was a little below at 118.29 with some ease actually, but could not face dropping down to the next support, which is the rising green short medium moving average, currently at 117.62, before turning back up again. Further down we have the October 2021 high at 116.92 and the mauve medium moving average, currently at 116.87. So the October 21 high at 116.92 and the mauve medium moving average 116.87. Meanwhile, overhead, the next resistance is the bright pink neckline extension to the April to May 2020 reverse head and shoulders pattern, currently 120.05. Overall, the market remains within the mid-2025 based bright red shallow bull channel, which is currently at 116.07 to 120.85. This pattern is the main showrunner for this market. Now, so far today, an interesting choice to move lower rather than higher, but only so far down to the June 2025 high. Cable, aka sterling against the dollar. A second, quite long, bearish black crow yesterday after the previous session's immediate countering bearish army and possible bearish double. A significant drop down through support at 136.21, 135.81, and a band between 135.55 to 135.16, and that's containing the 2019 high at 135.16. And even through the rising green short medium moving average, which is currently at 135.12, but halting ahead of the September 2020 high at 134.83, and reverting all the way back up to just over the 135.55 support. That became resistance and then became support again. We are now back within the previously broken and now possibly repaired very shallow dark blue bear channel, dating between early July and early August last year through to late January this year, and that's currently 129.83 to 136.10. As I said earlier this week, and I quote, staying above this dark blue bear channel will now be the single bullish imperative of this market if it is to retain its bullish nature, end of quote. Well, it looks like the market is possibly failing the bullish imperative. Additionally, and this may be because I've been staring at an LME 3-month zinc chart for a little too long, but I could see the action since mid-January today as a very lopsided, eccentric, really eccentric, double top pattern. If that is the case, then the key level to note will be the lows 2 weeks ago at 135.06. Now, so far today, we're capped by congestion at 135.81, and testing ever so gently, it seems to support 135.55. US dollar against the Japanese yen. An indecisive spinning top yesterday after the previous session's bullish engulfing pattern. Prices had support below from the 38.2% Fibonacci line, the July 23 to July 24 move at 152.52, and pushed up over, but did not close over, the 61.8% Fibonacci line for the 2024 move at 153.40. Importantly, the market tested and penetrated but did not really push up over the dark blue upper time, which is currently at 153.10, and that's of the very, very acute late January to mid-February bearish Andrews pitchfork. As I said yesterday, I may finesse this acute dark blue bearish Andrews pitchfork into a shallower bearish shift pitchfork for the same move if pressed, especially on any move up towards the overhead mauve medium moving average. It's currently at 154.93. Further down we have the interesting combination of the October 22 high at 151.94 and the November 23 high at 151.92. It's effectively one same level around about 151.93. Now this halted the decline in late January and should not be overlooked. Even further down is the bright red lower bull channel line, currently at 151.26, of the previously breached but seemingly repaired bright red April to November 2025 bull channel, and that's currently 151.26 to 158.14. Now so far today, a move higher over the dark blue upper tine and the 61.8% Fibonacci line of the 2024 move at 153.40 and into some free territory, but it seems the market's not that keen to try much higher still right now, as we've been below yesterday's high so far for quite a bit. US dollar against the CNH, the offshore Chinese yuan. Kung Hee Fat Choi, by the way. An indecisive doji cross yesterday after the previous session's somewhat impressive bearish engulfing pattern. We continue to be back down within, and the originally and previously broken December 25 to date bear channel, which is currently 684.66 to 689.23. Now I suppose in some ways we never really left it when we broke higher in late January. Below, we now have the 50% Fibonacci line of the February 22 to April 25 move at 686.60, with further congestion at 685.58. Both of these are within the bear channel right now. Looking overhead, well, we have the interesting bright red extension to the upper trend line, currently at 693.27, and that's of the May to August 2022 ascending triangle, as well as the closer May 23 low at 689.53. So far today, a similar base in the 687.95 zone, as we have done all this week actually, and a small move higher, but not by much. It seems to be much like yesterday right now when I said, and I quote, "With no real incentive right now to recover yesterday's fall, nor extend it lower either." End of quote. US dollar against the Brazilian real. A higher but still indecisive spinning top on Friday after the previous session's key reversal up and bullish engulfing pattern. It was a continuation in many ways from the reactionary jump up seen in the previous session, from the 50% Fibonacci line of the October 2019 to December 24 move at 513.82. But the rise was capped by the combination of the 61.8% Fibonacci line, the April 22 to December 24 move at 524.07. And perhaps more importantly, by the declining dark blue middle tine, currently 522.48 of the important mid-December 24 to mid-April 25 bearish shift pitchfork. This bearish shift pitchfork is still the showrunner here for this market. Plus we have Carnival holiday in Brazil as it carries on. US dollar against the Mexican peso. An interesting combined key reversal down and bearish engulfing pattern yesterday, after the previous session's unsurprising and very small indecisive doji cross. The market remains, if only just, below the breached November 2025 to date based bear channel, which is currently 1715.62 to 1760.69. It is not a too well defined bear channel, but it's still there and has been the showrunner here since late last year. However, in the attempts lower in January and February, prices found it tough testing, and March and April 2016 lows at 1709.23 and 1703.89 respectively, and they are seemingly finding the same now in late February at these levels. This hasn't stopped the market forming a possible bearish cat's ears pattern over late January and February, though so far the pattern has not been triggered on the downside, though it is close. I suspect this may be due to the influence of the nearby bright red neckline extension below to the January to May 2021 head and shoulders top. It's currently at 1681.58. This, apart from the 2023 low at 1661.94, is all that stands in the way before the significant congestion zone 1625.52 to 1646.25. Finally, I highlight once again the bright green April to November 2025 bearish shift pitchfork to help show the bearish angle of attack of this market. We are today just above the middle time. It's currently at 1707.31. Now so far today, capped by the dark blue lower bear channel line and held up by the bright green middle time.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.